Since the dawn of the information age, digital technology has been revolutionizing the way we live, work, and play. Today, computers are used to perform countless tasks that once required human intervention. Global positioning systems can pinpoint our exact location anywhere on the planet. Biometric security systems provide real-time identity authentication, and the Internet offers instantaneous access to a world of information, people, products, and services. Indeed, we've been quite successful at creating machines to automate and enhance our daily lives. But what if we could build a machine that could actually think and learn? And what if we could harness the power of this electronic brain and apply it to practical situations? Science fiction, you say? Think again. Artificial intelligence has become a reality, with far-reaching implications for a variety of disciplines. Consider the factors that drive investment markets. For example, global currencies, market indices, interest rates, consumption trends, productivity, and consumer confidence. These variables are in a constant state of fluctuation, changing randomly and rapidly. Now imagine our electronic brain absorbing, analyzing, processing, and reprocessing these ever-changing bits of information with lightning speed and transforming this raw data into highly informed investment recommendations. In effect, imagine a machine with the potential to increase the value of an investment portfolio. Sound intriguing? Then meet Anne. Anne is a neural network, a form of artificial intelligence that's been creating a buzz in the financial forecasting world. Known as the Asset Allocation Neural Network, Anne was developed to assist in allocating assets within mutual fund portfolios. Because neural networks can synthesize huge amounts of information without fatigue and respond without emotion or bias, some analysts believe that they can be used to make better investment decisions than human beings. Neural networks operate differently than traditional computer networks in that data and functions are spread throughout the entire structure of the network. This intricate web of connections mimics the organic structure of the human brain. And while ordinary computers are programmed to simply store data and execute commands, neural networks are adaptive systems that can actually learn from their experiences. But how does a machine learn? Neural networks devise their own methods for achieving goals by undergoing complex and repetitive training processes. At the start of Anne's training several years ago, the network was instilled with one specific goal: to determine the relative strength of each asset class within a given set. Anne was then supplied with a string of variables that can impact world investment markets. Driven by the desire to accomplish her mission, Anne examined and re-examined these inputs countless times. The field of possible outcomes was reduced until eventually the correct response for each pattern of inputs was determined. Through this ongoing process of training and testing, Anne teaches herself to recognize complex relationships among a large number of constantly changing variables. Once these correlations emerge, Anne can predict the impact these variables will have on each asset class during a specific period of time. Anne's output provides rankings for 7 asset classes according to their perceived potential to generate positive returns. Anne's recommendations are then entered into a quantitative optimization modeling program. This program determines an appropriate mix of investments for a specific mutual fund portfolio, given its objective and tolerance for risk. The following hypothetical scenario illustrates this concept. For simplicity's sake, we'll use a balanced mutual fund portfolio allocated as shown here. Domestic equities 25%, international equities 25%, domestic debt 25%, international debt 25%. Now let's say that for the sample time period, Anne has ranked these asset classes as follows: domestic equities, domestic debt, international debt, international equities. Since Anne is predicting that domestic equities will possess the greatest potential for growth, when the portfolio is reallocated, the optimization modeling program will increase the allocation to this asset class. Similarly, since Anne believes international equities will underperform, the allocation to this sector will be reduced. Thus, the adjusted portfolio might look something like this: domestic equities 50%, international equities 15%, domestic debt 30%, international debt 5%. By merging Anne's recommendations with an optimization program that provides weightings for each asset class, the portfolio can be positioned to take advantage of the market's current potential for growth, while at the same time exposure to sectors that are expected to underperform is minimized. It's interesting to note that even though Ann ranks international equities as the weakest asset class in our example, the allocation to this sector is greater than the allocation to international debt. This is because the optimization software employs nonlinear mathematical algorithms to determine the trade-off between return and risk for each sector. With Ann, we believe investors have access to a level of financial expertise that transcends the boundaries of human limitation. Ann's intelligence, objectivity, and amazing capacity to learn make her an extraordinary investment planning resource. Indeed, a machine with the ability to think and learn is reinventing the way money is managed. It's been our pleasure to introduce you to the future of investment management. We call her Ann.